There's a version of you that your bank is already planning for. A future version, worth millions, getting phone calls from executives who need your opinion. That version exists in their system right now, as a probability score. The only question is whether you ever become them, or whether you spend your whole life one tier below, wondering why the rules never seem to apply to you the way they apply to everyone richer. Stick with this, because by the end, you'll know exactly which tier you're standing in today, and exactly what has to change to leave it. Level 1, -$14. It's a Tuesday, 6:47 a.m., and your card gets declined at the gas station pump. Not because you're out of gas money, because a $15 streaming charge hit overnight while you were asleep, and you had $11 in the account. The pump machine doesn't know your story. It just flashes red. You check the app in the parking lot. Balance, -$14. Underneath it, already posted, a $32 overdraft fee. Some states banned this practice in 2025. Your bank isn't headquartered in one of them. $32 for being $14 short. The fee is more than double the mistake. You drive to work on fumes because you can't risk another decline. At lunch, a second charge tries to process. A phone bill, $9, and bounces too. Another $32. You are now $46 short, and the bank has collected $64 in penalties for it. The math isn't designed to help you recover. It's designed to compound against you. You call the support line. Hold music plays a jazz loop you'll remember for the rest of your life. 19 minutes in, a rep tells you the fees are standard policy and can't be waived without a supervisor who is currently unavailable. You ask when they'll be available. The rep doesn't know. 3 days later, your car insurance auto-pay fails. A $90 reinstatement fee gets added by the insurer, unrelated to the bank, but caused entirely by it. What started as $14 is now $150 deep, spread across 3 companies who all did their job correctly, and none of whom care that the original hole was the size of a fast food combo meal. You walk into a branch to plead your case in person. The banker behind the desk is polite in the way people are polite to strangers they'll never see again. She types, she nods, she says there's nothing she can do today. You notice she never once makes eye contact with the screen showing your balance. She already knows what it says before you sit down. That's the part that stings. Not the rejection, the fact that she decided before you even opened your mouth. Now here's the part nobody shows you. Same bank, same fee schedule, same overdraft policy on paper. Watch what happens when exactly one number moves. Level 2. $600, sitting untouched and checking for 2 straight months. The $11 monthly maintenance fee that's been quietly draining you for years. Gone. No email explaining why. No banner in the app. It simply stops appearing on the statement. The system noticed idle money and decided it was worth more to keep than to tax. A pop-up appears in your app. You're pre-qualified. Not a scam text. An actual offer from the same institution that flagged you as high risk 5 months ago. Nothing about your job changed. Nothing about your credit history changed except one column, average balance. The bank isn't rewarding character. It's rewarding a number holding still. You apply for a basic rewards card. Instant approval, 11 seconds, a $900 limit. Compare that to the secured card you were offered at level 1, the one that demanded you hand over your own money as collateral just to borrow it back at 19%. That offer is gone from your inbox now, replaced by ones that don't ask you to prove you're not a risk. You simply stopped looking like one. The teller greets you by scanning your card before you say a word, and there's a flicker of recognition on her face. Not warmth, not coldness, something administrative. You're processed a little faster. Nobody explains why. You're not important yet. You're just no longer a liability on the screen in front of her. Level 3. $4,200, with a paycheck landing on the same date every 2 weeks for 5 straight months. The bank's fraud algorithm, the one built to flag unusual activity, has quietly built a profile of you as predictable. Predictable is the word an internal risk model uses. It's also, functionally, the word for trustworthy, except you never got told that's what they were measuring. Real credit offers start arriving. Unsecured, $4,000 limits printed on cardstock heavier than the junk mail you used to get. The same bank that ran a hard credit check and denied you 9 months ago now sends a soft pull pre-approval that takes 90 seconds to accept. You didn't build a relationship with anyone. A spreadsheet somewhere decided you'd crossed a threshold. You apply for a personal loan to cover a transmission repair, $3,000, approved in under 24 hours at 12%. Compare that to nothing, because at level 1, the loan application wasn't even offered to you. The product didn't exist for the version of you that had 14 negative dollars. It exists now because the version of you holding $4,200 is worth lending to. Here's what almost nobody says out loud about any of this. The bank was never hostile to you at negative $14. Hostility requires attention. What you experienced was the absence of it. A system so indifferent to your circumstances that it felt personal, even though nobody on the other end of that hold music line was thinking about you at all. Level 4, $28,000. Your credit limit jumps from $4,000 to $11,000 without a single application. A notification simply appears, your limit has increased. The next morning, an actual human calls. Not a bot, not a script read at speed, a person who introduces herself as your account specialist and asks what your 5-year goals look like. Nobody asked you that at level 1. At level 1, nobody asked you anything except how you'd like to pay the fee. You finance a car. The rate quoted is 6.4%. The exact same lender who would have offered you 14% 18 months earlier for the identical loan amount, the identical credit score band you were sitting near then, adjusted only slightly. The price of borrowed money dropped because your balance did the negotiating, not you. A $60 wire fee posts by mistake. You send one email. 2 hours later, it's reversed with a one-line reply, handled. Let me know if anything else comes up. No form. No transfer between 4 departments. No script read at you. The friction that defined every interaction at level 1 has simply stopped existing, as if it was never a fixed cost of banking at all. Only a cost reserved for people below a certain number. Level 5, $210,000. The word Premier now appears next to your name on the login screen. You didn't apply for a title. The dashboard just relabeled you overnight. Your account specialist has a name now that you actually remember. Marcus. And he knows you're saving for a second property because you mentioned it once, in passing, 4 months ago. He brings it up unprompted on your next call. A mortgage pre-approval letter arrives before you've even started house hunting. $600,000, decided by an algorithm that ran your numbers without you requesting it. The bank isn't waiting for you to ask what you can afford. It already modeled the answer and mailed it to you first. A competing bank calls trying to poach your deposits with a better savings rate. You mention it to Marcus almost as a throwaway line. He calls back within the hour with a counteroffer that beats it. The institution that let you sit on hold for 19 minutes at level 1 is now actively fighting to keep your business, unprompted, the same day. Level 6, $1.1 million. Marcus stops emailing. Marcus calls, and not to check in, to ask when you're free to meet his colleague from wealth management. That colleague drives out to your office, not the other way around, with a leather folder of printed projections nobody asked to see. 90 minutes pass. Nobody pitches a single product. At the end, he simply says he'll follow up next week. You realize, walking back to your desk, that you were never being sold to during that meeting. You were being retained. A wire transfer gets stuck on a Friday afternoon. You call. Someone picks up on the second ring. No hold music, no automated menu. It's resolved in the same 9-minute call that would have taken 3 transfers and a callback promise at level 1. You're invited to a private dinner the bank hosts twice a year. 10 guests, a guest speaker, a rooftop view most of the city will never stand at. Nobody at the table mentions balances or fees the entire evening. Money is the reason everyone is in the room, and also the one subject nobody needs to bring up. Level 7, $9.4 million. You no longer have an account specialist. You have a private banker, a title that inside the bank means something narrow and specific. He personally manages fewer than 20 relationships, and yours is one of them. He remembers your daughter's college major without checking notes. The mortgage rate on your vacation property isn't listed on any website. It was negotiated over a phone call that lasted 6 minutes. You walk into a branch across the country you've never set foot in, and the manager greets you by name before you've handed over ID. Somewhere in the system, your file was flagged the moment you walked through the door. Not because you're recognizable, because your account number is a private placement deal. The kind that never touches a public prospectus, gets mentioned to you over coffee before it's offered to anyone else. The minimum investment threshold is quietly waived. Paperwork that takes standard clients 2 weeks clears in 2 days because someone attached a note to the file that says exactly whose account this is. Level 8, $41 million. You don't have a private banker anymore. You have a relationship that shows up as a line item in someone's annual performance review. Losing your account wouldn't just cost the bank revenue. It would cost specific people, their bonuses, their promotions, possibly their jobs. Nobody tells you this directly. You can feel it in how fast every problem gets solved. Deals stop being pitched to you and start being built around you. A structured investment gets drafted with your tax situation in mind before you've said yes to anything. The chief investment officer schedules a call, not to sell you something, but to ask what you're seeing in your own industry that the bank's models might be missing. And here's the part that should actually bother you if you've followed all 8 levels honestly. Nothing about your character changed between -$14 and $41 million. The number changed. The bank's entire personality, cold, indifferent, generous, deferential, was never really about you at all. It was a mirror reflecting your balance back at you, level by level. Every fee-free perk sitting at the top of this system is funded, in part, by the $32 penalties still being charged to someone right now who is $14 short on a Tuesday morning. That's not a conspiracy. It's just how the math of a bank's balance sheet works. And once you see it, you can't unsee which side of it you're currently standing on. The system was never broken. It's running exactly as designed. The only real decision left is whether you spend the next 10 years reacting to which tier you're in, or start deliberately building toward the one you actually want to live in.